Hello guys, it's Jacob from FINEIGHT and I like to share the trades I've entered yesterday with you, uh, just to let you know the ideas and thoughts behind the trades and why I entered that. We'll start with some short analysis on a weekly chart and then we will switch to daily chart and I will show you why it's sometimes good to wait for some discount entry if your entry point is too far from the zone or some level you want or expect some retracement. Let's start with analysis. If you connect 2 points from 2017 April and December 2018, then you will get very strong trend line. Why very strong trend line? I have mentioned in previous videos that if you connect 2 points and distance between those 2 points is very high or big, then you will probably get a very strong trend line. Look what happened. Market dropped very fast and stopped at the trend line and now it's above the trend line. So we see that the trend line really works. So that's very nice, strong support level. The second information that is very good on weekly chart is rejection. Market rejected lower prices very quickly. Look what happened. This green bar opened below the previous week because we have a weekly chart, so every candle is a week. And look what happened. Market opened and almost immediately went above the trend line. So nobody wanted to take short trades. Nobody wanted to trade lower prices. So that's very strong rejection. I think it happened in 1 or 2 days. So very strong. If there is some weak rejection, you have to wait for confirmation. But this is very strong rejection. So I'll switch to daily chart and you will see that much easier. Now, the third very good thing is point of control, is the fairest price in which business is being conducted. In this case, it's number 200. Very nice number 200. Everybody can see that. And look, this is the fairest price for a long period of time. Let's imagine the natural gas, the price tag is, for example, 10 for half a year. And now price is maybe 12, okay? Imagine. So you wait for the price 10 until the price drops again to 10 because you think that's the fairest price, number 10, not 12, it's too expensive. 10 is your fairest price. And it's the same here. Look, 200 was the fairest price. And again, it's something like a magnet for the market. Market wants to hit the fairest price, the point of control. And in this case, it's very strong support level. Look what happened. Market stopped at the point of control and now started to trade higher. So very strong support level. The third very good information is a low volume node here. Nobody wanted to trade prices around 220. So I have a zone there and look, it's at the same place as the trend line. So again, very nice confirmation of this level that nobody wanted to trade at. So now we'll switch to daily chart to find some entry or what I entered yesterday. And look, I saw a very nice pattern, 1, 2, 3 here. It was also behind the trend line, some trend line minor from daily chart. And the problem was that the distance was really high. I put my stop loss behind the wall. What's behind the wall? I look for some high volume nodes on a volume profile. If you take volume below the market and you turn it on the side, then you'll get a volume of every price. And 200 was very attractive for traders. And it's very hard to go through the high volume node. It's something like a mountain. You have to overcome. Okay, so I always put my stop loss below some, in this case, if I enter long trades, below some walls, some high volume nodes. And in this case, imagine that my entry would be here, 1, 2, 3 pattern. Look what's really crazy. I need very big distance, very big move. to be profitable from this trade, because my risk reward ratio is, I risk $100, I want double, I want $200. So I need, oh, let's say 2 times bigger move to profit than to my stop loss. That's really crazy. Look, from 200 to 400, it can take years to see some profit from this trade. It's crazy. So it's much better to wait until the trades or the market create some retracement. And look what's really interesting. Okay, my profit target is now closer to the market, is near the previous high, okay, the market high. So I have bigger probability of reaching that point in some normal time. Imagine that you, for example, trade with CFDs and you have overnight fee or some margin requirements. So you don't want to spend years in one trade just for some $100. So it's very good if you decide that it's very strong signal and you are waiting for some pattern, but it's too far. Forget about your thoughts and enter the trade if you see some retracement, some discount on that trade. At this point, don't think about, oh, market is again going lower. I will wait for that, because you already decided to open that trade. So that's the reason why I opened that trade. And I have a stop loss below, this is the blue line, below the point of control, below the trend line, below the zone, below the rejection level. So I think my stop loss is safe. And if the market will go below my stop loss, below this very strong support, then we will switch from some long perspective to down perspective, because we will say, okay, no longer long trades. So that's my catastrophic stop loss. So never mind, if it happens, I have a stop loss to reduce my loss. So that's okay. But I want to explain why, the way I put my stop loss, or why I put a stop loss there. Thank you guys for watching, and if you want, you can also enter that today, and we'll see what will happen in weeks or maybe months. Thank you guys for your attention, and have a good day.